Let's talk a little bit about crypto. This is something that you've been on for a very long time. I think probably a decade. And sounds about right.
Yeah,
ish?
not quite a decade, but a long time. I
Yeah.
mean, you and I talked about it a long time.
Yeah, we did. And, I think this is another example where people, there's been peaks and there's been valleys, but it's been lower left, upper right for the most part, right? And again, I know you guys do a bunch of technical work, a lot of quantitative work. What is your work telling you right now? If we think back over the last year in Bitcoin in particular, right, we had the approval of the ETFs, we had a big ramp in those things, then we saw it go sideways for, I want to say 7-8 months until the election. And then it goes from basically 65,000 up to 105,000. And now it's back here. It broke below that 90,000 level. And maybe it's like 84,000 or something like that. So it's kind of in the midpoint of that range that we've been in over the last 4 months or so. I know you don't think about it that granularly, right? But you probably get questions a lot about the near term. Give us your 411 on Bitcoin right now.
The best strategy for our clients that we've recommended is you just want to be a long-term holder. But most people don't approach crypto that way. Most are trading it and want instant return. The work by our technical strategist, Mark Newton, so he thinks Solana, Ethereum, and Bitcoin all have downside. He has been bearish since mid-January. So I think it's been correct. And his downside target for Bitcoin is 62,000 by the end of March. But to me, is 62,000 a reason to turn bearish on Bitcoin? I mean, if you're trading it, yeah, but Bitcoin was $1,000, $100 10 years ago. So, 60,000 is still a fantastic return. And I think Bitcoin's usefulness is still improving. I don't think it moves. It's still a risk on assets. So I don't expect it to do well if the market is being hit by tariffs. Like it's not immune to that kind of turbulence. But is the trust around Bitcoin going to grow over the next 5 years? Yes. And is it going to be increasingly viewed as a store of value like gold? Yes, I think increasingly. And then is there room for a lot more people to own it? Yes. So I'm not really bearish on it, but I think in the near term, it's hard to say it should go up right now.
Top analysts from financial giants such as BlackRock, Bernstein, and Standard Chartered are now all eyes on Bitcoin, speculating about its trajectory and hinting at a pullback before the surge. Will Bitcoin continue its ascendant march, or should investors brace themselves for an adjustment? What's even more electrifying is the ever-growing list of institutions fanning the flames of this crypto firestorm. Let's dive deeper into the heart of the storm. Welcome back to Investocracy Crypto.
Let's just kind of take some stock of the whole conversation a little bit, because you've been very bullish for a while and you've been right. Does 2 months cause you, we're kind of basically, let's say the S&P is unchanged, the NASDAQ's down a few percent. We're 2 months into the year. There's a lot of uncertainty about, we talked about immigration, tax, tariff, geopolitics, the list goes on and on. Things are likely to cool out a little bit at some point, right? On that sort of front, we get some of that uncertainty out of the way. How are you thinking, just if you want to put it in a nutshell, the economy this year? It sounds like you think rates should go lower. You think inflation is probably not going up much higher. And then generally, how are you thinking about the stock market?
I mean, the market is trying to price in a lot of these uncertainties right now. And so it's understandable that we're churning, but investors don't want to become too bearish, because the market sentiment, and it's already measurable, like the AAII survey, which is what we've used for the last 14 years. I think it's the best retail sentiment survey, is at the same bearish levels it was in the fall of 2022. So retail sentiment, and that's probably because there's been a ton of margin calls last couple weeks, is at the levels that were at the depths of that recent bear market. So the investors view this as a crisis when it's really a growth scare. So to me, I think there's a good chance we're making our lows for the first half, like this week. And
like down 5-6%, you mean?
Yeah, it could be.
Yeah.
I mean, the only thing is I'm not that optimistic about the job picture for the near term. So maybe that's one last leg. But the reality is that a lot of bad news has gotten priced in. And, and the flip side of this is that the closer we get to stall speed, the more the Fed has to get off neutral. And I think the White House will have to back off talk of things that could be hurting the
Do
economy.
you think we're going to get a 10% pullback in the S&P this year? Because we did have one July highs to the August lows, and things kind of accelerated into that August low, and it felt a little panicky. And again, since then, we haven't had too much panic. I think that move in December after the Fed meeting, that felt really bad. But we were not making, it didn't take long to make new highs.
Well, I think that July to August was like essentially, I would say Fed driven.
Yeah.
And so like that makes sense because it felt like either the Fed made a policy error or the Fed turned hawkish.
Right.
But either way, we had a big drawdown. Will that happen this year? I mean, yeah, I think it'll happen. If I'm guessing, it's more in the second half. So I think this is just a flesh wound right now, not the source of a drawdown.
Okay, so flesh wound, like how much upside do you think if we get a lot of those headwinds kind of out of the way, a lot of those uncertainties we just talked about, let's say we get the base case on that kind of pro-growth agenda that a lot of folks were excited about?
Let me be clear why I don't think it's 10%. Because let's say that some policies implemented that would cause the U.S. stock market to go down 10.
Yeah.
I'll guarantee you the rest of the world's down 30.
Right.
So will Europe and Canada, Mexico dig in and like, oh, we'll just power through this? No, they're going to capitulate. So the reality is that this brinksmanship probably means the other side caves in. That's why I don't think
But it probably takes longer than expected because I think we keep throwing these threats out, but we don't actually put any like requests for concessions out, right? Like there really aren't that many right now. I mean, it just seems like it's a bit of a tit for tat. And I think the other side is just kind of sitting there and they're taking the volleys right now because they don't really know what they want.
I'm not an administrator, so I don't know what kind of back channel talk there is. I'm sure there is, so I don't have an answer for
Well, listen, I'm probably with you. I expect some sort of deal, the art of the deal, that sort of thing.
Cryptocurrency aficionados fondly recall the boosts that set the stage for Bitcoin, the phenomenal endorsement of spot Bitcoin exchange-traded funds, ETFs, within the U.S. market that funneled billions in institutional investments, led by BlackRock, the April 2024 halving only added gasoline to the fire, cutting minor rewards in half and transforming Bitcoin into an even hotter commodity. And let's not forget the political tremors with Donald Trump's return, heralding an era of optimism fueled by a pro-crypto administration.
Here's a leverage play on SWI, which is deep book, which is the liquidity layer for SWI. So if you think of like the Jupiter idea, the more activity that happens on SWI, the more deep book is likely to go up. And it's like $180 million right now as an entire value. Now, if we're right about SWI, that it gets into the top 10 and potentially the top 5 in this cycle, well, the liquidity layer is going to be extremely valuable. So, there could potentially, and it's not a recommendation, but it could do a 10x. So this is how I'm saying there are ways of having leverage plays on top. Okay, let's go back to the liquidity story. So the liquidity story here is, oh my God, and I've been sent this chart 1,000 times by people. Oh my God, what happens? Is it all over? Is this the peak? Is this the end? Do we get out now? What happens? What happens? Panic, 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 bullshit. Okay, we had exactly the same thing last time Trump was elected. The dollar was strong, rates went up, liquidity contracted, the market had a big rally, which is Bitcoin. And then in January, because of the lag, what we found was a sharp 27% correction in Bitcoin. And then it ripped higher. Ripped higher so much, in fact, that it went up 23x. Now, I'm not expecting that because this was a much earlier cycle. But what we're saying is that correction is not to fear. That correction is just a marker point from phase 1 of the banana zone to phase 2 of the banana zone. Phase 2 of the banana zone usually goes into US tax season, which is like April. Then there's usually a consolidation because people have to sell tokens to pay taxes. And then there's usually phase 3 of the banana zone is the rip into year end. And that's all driven by the liquidity cycle.
In this intoxicating mixture of bullish signals, analysts like Tom Lee of Fundstrat wittily suggested that Bitcoin might just visit the stars, or at the very least, a lofty $250,000. But volatility remains Bitcoin's constant companion, reminding traders that every meteoric rise faces gravity's test. Veteran voices, including Peter Brandt, warn of possible downturns, from potential formations such as the head and shoulders pattern, suggesting a dip to $78,000. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
So here in white is rate cuts priced in. Very few rate cuts priced in. So there's like, I don't know what the scale is here, but there's very little rate cuts priced in, but it's driven on a forward basis by the dollar and the long end. So it's now saying, as we weaken economic growth, we should start to see rate cuts. And then, as you can see, we're starting to see the pickup again in financial conditions, which is important. And I'll come into that in a minute. So when you put it all together, they're all the same thing. Fed rate cuts, the DXY, 10-year bond yields, they're all highly mirroring each other. 10-year bond yields seem to be suggesting faster and faster that the dollar should roll over and rates should roll over too. That creates financial conditions. And now what we've got here is financial conditions index, which is rates, the dollar, and oil prices, has been consolidating for a period of time. And it is suggesting that the ISM, which is the business cycle, the Institute Supply Managers Survey, should be much higher, i.e. we've got economic growth to come. It leads by 9 months. So in 9 months' time, the economy will be a lot stronger than it is today. And this is going to be important for you. So all of the stuff we talked about, rates, the dollar, even oil prices, all drive financial conditions, which drives cryptocurrencies, which drives markets in general, which drives the business cycle. When we look at the forward-looking basis on the business cycle, we can see things like the Philly Fed. Well, their new orders index is exploding higher. Now, whether this is just on the Trump victory or whether it's on orders they see in advance, not sure yet. Philly Fed expectations index exploding higher. Empire Manufacturing, that's for New York, exploding higher, all suggesting the ISM is going to be super strong going forwards.
With institutional backing and groundbreaking innovations in legislation driving its adoption, Bitcoin still holds considerable allure. Current valuations hovering around previous highs certainly showcase its viability as a potent investment option. Analysts, speaking of Bitcoin's forecasted climb to $200,000 and potentially beyond, paint a future tinged with immense possibilities. But what do you think? Share your thoughts. And finally, if you would like to know more about cryptocurrencies or specifically Bitcoin, go ahead and click on the next video on your screen. See you there.